The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tigers Editions Hour. This is the 10th of April, the Friday edition of the Tiger Technicians Hour, 877-927-6648. Yep, 6648. How many times have I said that? So sometimes it just slips the tongue. And we are looking at a very interesting market here. One of the reasons why, for my subscribers, I've spent quite some time talking about the volatility index, and that there's something happening that the volatility index is suggesting that there should be much higher prices, but it's giving us a cushion to the market. That's number one. And number two, it appears to me that the power in the foreign markets, as they play catch up to us, a little bit more than catch up. In fact, look at this. This is not the exact price, but it is, in fact, the exact chart formation of the, there's a 120-minute chart. Here's a 120-minute chart. Let me move it out the way. Of the German stock, it's the Dow Jones German stock. I call it a stock proxy, but let's call it an indicator for now. Very powerful few months in the, not few months, it's 1, 2, 3, 4, 5, 6. Look at that, 6 months, half a year. It's been powering higher in the monthly chart. No peak here, it just continues higher. Here's the other thing. The weekly chart just broke out 2 days ago to leg D, and I'm calling this in the daily chart leg B. I should give it an alternate count by saying F/B, but the stochastic's at 87%. NACD is attempting to cross positive. I'm going to give it the benefit of the doubt and call it a B, suggesting that sometime next week we might get a short-term top there. That's the aspect that is, I think, the most important right here on the shorter term. Let's just go to the GB Dow. This is Great Britain, also a proxy for the Great Britain market, UK 30, let's say. And what we're looking at here, leg D maybe, or a B in the monthly chart in exactly the April timeframe makes it, remember I spoke about this yesterday, an exact match in time to the previous high, low, high, and that high, the last high of 2007 in May, oops, I'm sorry, in 2011 in May, became the start for a down and up move that's coming in April to exactly the same time frame of a match with the previous rally, decline and rally. Okay, so that just keeps it as a something to watch for in May, in April obviously, but going into May. And the weekly chart I've got is leg E. No, I'm going to call it leg D because it's an official leg D. Yeah. So I'm going to talk about this as Technical Friday. I wanted to talk about this right there. Okay. There. Okay. In this particular instance, what we've got is, let me just run it through. The Dow's up 66 at 18,024. I had said that over 18,010 into the 18,020 area, that I have to consider as a positive in the arch formation and negating the arch formation, now using the second cup formation. We'll get into that as well. I'm just going to run the numbers. Dow is, the S&P is up 7.5 at 2,098. The comp index, now this is going to be very interesting. The comp index is up 13. It's kind of lagging. It's only up 0.28. And it's at 49.87. The VIX is very interesting. It's now back in the 12s at 12.87 at down 0.22. To me, that is saying that we have gotten into an area where, at least for this particular phase, shorting is not going to work unless you've got specific stocks that are acting very weak. I've identified some for our traders in my opening call. And let me just double, I don't want to talk out of turn here. It's right. Just disappeared. Yep. Yep, it's still pretty much exactly where we shorted it. So what we're looking at is a situation that says in the daily chart, I'd spoken about this yesterday, the time price match in the British index, that's the UK index. We got that W formation with the rising highs and rising lows. That says that it should still go higher in its leg C. I'm calling it C now. And that says you should go to at least a D, maybe even an E. So next week should be higher in the early part of the week. Okay, so now let's go to some other things. The IWM, which is having an okay day, it's up 0.64, up 0.51% at 125.66, is really struggling since it was down yesterday. And what I said was, as I'm looking at the technicals, it's really working very hard and it should be higher. And it's giving me a sense that the 126.32 to 126.31 2-bar Chapman wave reversal that saw a very sharp 3 to 5% decline, that is going to be key, because if there's a break to the upside, it needs to get to a close above 126.55. It must be in the higher part of the 126s. And then I have to turn around and say, you know what? I have to now consider that the weekly chart, which is at 86% in the stochastic, and the MACD is still good. This is the Russell 2000, is acting extremely well. And being short at this particular time would be not the ideal thing, because you have to let this upside play out. If it starts to stall badly by Tuesday, it hasn't crossed the 126.32 level, but instead it's closer to 125.20, then my premise that the markets are rotating and that we're now seeing the rotation to the European sectors, Asian sectors, would be something that you have to consider in terms of your portfolio. And now there's what I wanted to say. The QQQ is a very good example. For instance, they're having a very nice rally the last few days, but it's quite a bit under the 109.42 level that was the recent recovery high. And if that's the case, then what we're looking at is a situation that says that the rally that we are in and the volatility index being so low would tell us that we've got to start preparing for some kind of a consolidation. If in the next week we see a 3-point rally in the QQQ series, the PowerShares QQQ Trust series, and they go above 110, then it's the same as the IWM, which will probably at that point be in the high 106s. So this is a very important period. And all of a sudden, it's so fascinating that in this particular period, what do you get? You suddenly get an inspiration, and GE sells off all their real estate as part of their financial portfolio. And now they're pretty much out of that whole portfolio. They are now, I suspect that they're now just a conglomerate in the very heavy equipment, and it's more the classic Dow type GE that we used to know years ago, industrial GE. Okay, now within that context, let me show you the GE chart that spiked, huge spike. It's taking it close to the 2807, today's high, round number low 27, high of 28 round number, taking it towards the 2809 recovery high, not all-time high. All-time high is way up at 42.15. But this is a very good sign. And what happens is that the response is really what you want to see. So I'm not really interested in today's I am interested in today's response because it's quite a heavy response. But what I'm really interested in is how does it act by Wednesday of next week? Where is GE? Is it into the gap, into the 2650 to 2630 area? Or is it up at the 29s? Going to be very interesting and very important to the market, especially to the Dow, because it's part of the Dow. Okay, let's go on. Gold. So now what we've got is we've got gold at 1207.30. Nice candle. And especially for Friday, Fridays have been an alternate. They used to have horrible Fridays. Now gold is having pretty good Fridays, and we've got a leg B in the weekly chart, and that's, I can't change my opinion. For some of my subscribers, they've got a gold ETF, and we'll just be there. All I'm looking at is arch formations. I suspect there's another arch formation that is forming. You want to trade it, that's fine, but it's real tough because I think the upside is kind of capped, but that doesn't mean to say you can't ride with it as it's moving slightly higher. But now look at this. In the silver chart, silver has a different kind of formation. In the monthly chart, let me just do this real quickly. Keep your eye on this right-hand chart right there. Now watch. Keep your eye on the right-hand chart. Now watch. See, there's a difference. You see the bump up in the gold contract? When it finally in the monthly chart, the stochastic gets some kind of level where it wants to try to turn up. Look at those nice big moves, but it's all within lower highs and lower lows. I don't think that's going to change very much. So as we're doing this, I'm just going to quickly run through a question about British pound. Let me just go to it. I hope it's the updated version. Yeah, British pound looks, whoa, this is the candle. In the arch formation, the candle that breaks the left side low has to get back into above the left side low, which is on the 18th of March. This is the continuous contract. Having a little trouble with the mouse right now. At 1.4680, and it's at 1.4642. It has to get back to 1.4680 either today or by Monday, or else it's going to go lower even. And that says that the dollar is probably having a good move to the upside. We'll take calls in a moment. Let me just do this. Yeah, the dollar's having a nice rally. It's within this rectangle that I identified a couple of weeks ago, and there it is. 9-period moving average held in the weekly chart. Dollar's still looking quite good. And now let me do this. I'm going to do one more thing, and I'll say the euro is like the British pound. It broke down. But it has not taken out its left side low, but it has the arch formation, not a great pattern, and it's within a rectangle formation. I suspect it, like the dollar, probably won't take out the high. It's going to be in this trading band. I think that the euro is going to also stay in this band for at least another week. All right, let's go to John in Philly. John, how are you?
Basil, thanks for taking the call. I'm glad I could reach you right here. You've just gone over silver. And I wanted to ask you a very specific question on silver, if we could.
Yes, please, fire away.
Basil, I just posted into the Tiger's Den a monthly chart on cash silver.
Okay. I'm going to have a look at it. And the question is
the bottom formed against the 200-month EMA?
Okay. We'll be back in a moment with John and Philly. The Dow's up 69. Basil Chapman, Tiger Technicians Hour. We'll look at continuous silver contract and that 200-period moving average in the month. And I'll be back with John in Philly. Look.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back, and we've got right here looking at the daily chart of silver. It's trading at 16.460. This is the continuous contract. It's up 0.284. There's a level of support that goes all the way back to around about November of last year on the daily chart. And whenever I call it a cluster formation, whenever there was a sideways cluster formation, the result was that from coming down, that became support level in the 16-ish, just under 16, 15, three-quarter area. And then there would be a rally. Well, we've got a little bit something like that right now because the price yesterday came down to the 16.105 area. And John, I could not see. Oh, there it is. Okay. Let me just check the chart. Okay. And is that a monthly? Yeah, that's a monthly chart that we're looking at, right? Yeah. So, okay, let me do this. I'm going to go one step at a time. Do you have a position now in silver? Oops, is John there? I hope John's there. I know he's back in the den. So let me just, I'll talk about this and then just either in the den or pop in right here as I'm talking and just say, I'm here and tell me what it is. If you have a position in silver, it's real easy. I'm here. That means I'm here in the den. Okay, John, so let me just say, that you see the candle right here, this long-legged doji. Hi, John, you're there. So my question was, do you have a position?
I do. I'm long at 16.25 Thursday.
So you're up about 20-something cents. So here's what I was going to suggest. I'm going to just quickly, only because of the starter position, I need to look at the shorter term, A, B, C, D. We've made a peak D in the 120-minute chart. It got repelled at the 200-period exponential moving average, and support is 16.387. So let me just get that out the way right now. That's the very near term. But really what I want to look at and discuss is in the daily, and we'll start off with the daily. The daily chart is suggesting to me, and I'm going to have to speak to this in the broadest context and the narrowest context. And the broadest context is I still have to believe, number one, that the strength of the dollar and that the Japanization of our bond yields with the TLT at 129.97 up 54 cents, pushing rates lower, that it is forcing people around the world into the markets. I think that that's the issue, which means there's a corollary to that, and that is that there is, even if you go to the supermarket and some of the items you're looking at are not only 25% higher, some are 50%. I even saw one the other day. Unless memory doesn't serve me, over the last 2 years, it's gone up 100%. So with that in mind, that's not what the Fed is looking at. They're looking at other things, and that tells me that this deflationary aspect, which goes right from yields to commodities to almost anything you want to buy, especially with the internet, you have choices. You do not have to spend 50 grand on a car. You can get a fantastic car for 28 grand, and it's your choice. So it's choice that's the issue. So I'm going to talk to that in the context of the larger picture, which says to me, and I'll go to the monthly in a moment, that the larger context says that the commodities at this particular point could see a bounce, like we've seen. Oil and others have had a nice bounce. I have to treat them as bounces. Now, let's get to the silver contract, the daily. This arch formation that held beautifully from yesterday's low needs to get into, it doesn't have to be, I usually say by Monday or Tuesday, I would say by sometime next week, without, other than just a quick dip to the downside, that level that of the low of yesterday, 16.105 on the silver contract, on the continuous contract, that must not be taken out. You can just dip under it, but you've got to get right back in. The most important thing, if you are long, you want to see the MACD flatten out and then start to move like an M-shaped formation back above the red line. The green line goes above the red. But that's really not the issue. The stochastic is not showing any strength whatsoever. If that stochastic at 46 doesn't go to 52% by Tuesday or so, silver's not going to be able to hold the rally. And the 9-period moving average of 1659 is going to be a repellent. So I'm saying sometime, I'd prefer earlier than next week if I'm looking at the upside. I want to see it start to not just get into the 1660 area. It really has to try to touch 17. As the moment it does that, I would say, great. Now, the position that you have, I would consider it activated, and that there's a good chance that it's going to break the recent highs and it's going to test the 1762 200-period exponential moving average. Then I wanted to go to the weekly chart. Can you hold on or not?
Thank you. Yes, thank you.
Okay, great. Folks, we're looking at silver, and I will be back looking at the weekly chart based on the Chapman Wave methodology, and also had a question about a 120-minute chart.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. We're on with John and Philly. Dow's up 88, S&P's 9.5 up, and we're looking at the VIX. And we just mentioned the VIX is down at the 1274 level. Oh, buying pressure. So we're looking at the weekly chart of silver continuous contract, and you can see, John, that the stochastic rallied quite sharply. The unbalanced volume also rallied quite sharply late March into early April, and yet the price of silver did not go above the previous high of 1767. I do not like that. When I see, I call it wheel spinning, it means that you've put it into gear, you try to drive off, and the wheels are spinning, and you haven't gone anywhere. That means you've usurped.
Basil?
Yes.
Could I ask you a very specific question? It's everything you're pointing out is absolutely true. There's no lift in the weekly time frame to this. I have a very specific question. I have posted in the Tiger's Den the best, most accurate cash market data I know of, and I've applied the 200-month EMA, and I posted that for your benefit and those of the Tiger Den members, if they'd care to look.
So that is that is an exponential moving average, not a smooth moving average?
It's the EMA, and that comes in at $14.60. Now,
right.
The bull market in silver that drove the price from $4 up to $48, up at $48 when that occurred. The 200-month EMA was down at 10. In other words, price just surged so far above past that.
Okay.
It was breathtaking, of course. Now, price has come down and tested and held. It's tested basically 3 times in the past 6 months, that 200-month EMA. Now, I thank you for teaching me and your other students the utility of the 200 EMA. I had never seen or used it or focused upon it until I had met you years ago. So what I have to ask here is this. Now that silver, having backed off of 49 and come down to 14.5 and 15.25 just in the past 4 weeks, a massive bear market, but testing and holding the 200-month EMA. What does that tell you? Is that feature, is that phenomena, is that tradable? Is that forecastable? That's a very specific question I'd like to ask your opinion on, please.
Okay, so let me just show you something here. I'm going to answer that. First of all, immediately I'm going to say to you that it's interesting. I have the 200 EMA, and it's at a different price point. My 200-period exponential moving average is, and therefore I must have a slightly different chart to you, but it seems to me, looking at your chart, that we're in absolute sync with what's going on. So all I can say is, and of course yours is, the way I'm looking at it is a little squashed because yours has gone back to 1999. I've only taken mine back to 2006, but basically they look the same. My 200-period exponential moving average is right here at, if I can get the mouse to keep still, here we go, right there at 17.933. That's why I asked you about it. So I'm not sure why we're getting two numbers unless the data that's driving the results to get your 200 EMA, we've got slightly different data. So let's just treat that as something that I can only say, I'm going to deal with it from my 200-period exponential moving average so that we go apples to apples. I don't want to suddenly move to yours. So let's just leave that aside for a moment. If you look at mine back in 2008, look how beautifully the 200-period exponential moving average acted as not just a support level, but as a springboard. You got the stochastic turnaround sharply, you got the MACD turnaround sharply. Look what happened when it almost went to the 200-period moving average, which was quite a bit higher in 2013. That was in June, and that low was almost at the 200-period moving average. You got a nice bounce, but look how bad the MACD was, and look how poor the stochastic was. Aha! Now we're getting the soft M pattern, and that's the reason why I brought this up in the weekly chart. It's the same in the daily, in the monthly. You see how strongly the MACD, well, the MACD crossed over, but you see how strongly the stochastic have moved up? But the on-balance volume, the blue line, is kind of flattening out. And that's suggesting to me that there's not, at this particular time, there isn't. I need to see a catalyst so that you can get the torque to break out into leg B in the monthly chart. If we get a strong leg B in April above 1950 or maybe 1990, I'm going to turn around and say to you, aha, now we can get a larger arch formation, still within the context of the Chapman wave, lowercase h. Let me just go to this right now because I think it's appropriate for people who have just tuned in. Chapter 17. All right, this is not the one I wanted, although it's gold and the dollar mirror image. I want to go to chapter 17 on my CD, and I want to show something that people will see exactly the pattern that we're looking at. And what it says is that when you come out there, this is the H pattern. It comes down sharply, makes an arch formation like a lowercase h, breaks the left side low bar and goes further down, breaks the left side low bar. Then you can start getting larger arch formations, and the larger arch can quickly go into a lowercase m formation, M for mother. And what we've got here is that you had that exact pattern way up there when both the GLD and silver were trading back in 2011, 12, broke down in 13, started another little MH pattern that went to an M pattern, and we've just done the same thing. So I'm looking at this and I'm saying, okay, silver, I like to look, and you see I've got right here months and months, maybe a year or so ago, I had already typed in the A pattern, which said that you can go up and come down in the same amount of time. And if we consider that the low from back in February of 2000, no, make it January of 2010, or February of that year, that low, that A pattern came down and it extended a little bit. And that's the reason why I had said, and boy, I could be totally wrong with this, I had said that my contention was that when I start to see for sale signs or for rent signs in all those little stores that opened up that said gold bought and sold here, then I'm getting the kind of low in the metals, silver and gold, that will be a longer term, an intermediate term to an even longer term move to the upside. So all of that put together says to me, I'm just expecting another H formation, but boy, if 16 support goes in the next 3 to 5 sessions, I'm sure you won't be around either. That I would suggest that it's going to be going in an H formation and we're going lower. That's why it is so important. So to answer your question, I'm using a different 200 period moving average. The monthly chart is gone way below. It's been under the 200 period moving average for 1, 2, 3, 4, 5, 6, 7, for 8 months, for almost a year. It makes that resistance almost impenetrable until you get a really powerful move. And that would say that the weekly stochastic has to go from the 44% level now to somewhere, I would even have to say that it has to get close to 70% or 80%. At that point, I'd be saying to you, aha, now we've got a magnet formation in my 200 period moving average. We can go above it and we will come back down to test it, but we haven't even broken and closed on a monthly basis above it. I hope I'm answering your question both in the short term and the long term.
Basil, thanks so much for your help. I do appreciate it.
Thank you very much, and thanks for pointing out that chart to me. So, folks, let's just do this. What I want you to also look at here is I want you to go back to the VIX index. Just briefly, I'll talk about it probably as we're closing out the show. But this VIX index, remember the Friday close is so important. Last week, we almost went to the 200 period moving average, the 9-period moving average in the weekly chart, that black line right there in this middle chart. The monthly chart, 15.03 is the resistance. We're at 1277. I have to contend that within the context of my thinking that we would be pulling back, so far, I don't see any change in my belief that let me go to the charts as I'm doing it, that the IBB is not in a consolidation formation, even though it's at 355 up 2.69. I still think that we're just forming another H pattern at this particular point. I also think that the XLV, which is the healthcare, it is at a very important level. It hasn't quite given me the same signal based on the technicals yet, but I'm real close to saying that if the XLV, the trading at 73.86 up 43 cents, starts to hit resistance in the 74-ish area and then pulls back under 72.50 or 72 by the end of next week, next Friday, or the following week, without breaking into the 75s, then I'm going to have to say, yep, I believe that we've made a peak D of some significance, at least intermediate term. So we're talking weeks to maybe a couple of months where it consolidates. I haven't got any signal in the monthly chart yet, so I can only do one thing at a time. And so far it is the action in the weekly chart that I'm looking at and the daily. So a break above into the 75 says, hey, mister, you're wrong. There's just internal strength. And the same kind of buying that keeps filtering in from fund managers looking for groups that have, sectors that have held really well. We're going to get the test there. Now, this is very interesting to me. This morning I had a buy. I'm going to talk about it because we didn't get it. And I just wanted to show the discipline. I wonder if I can find the chart. Oh, I think I erased the chart. Darn, that was a mistake. Okay, we were looking at LinkedIn, a stock we once had at about 150, and then we got out of it. I think we made a little money, then we got out of it, never got back in. But it was one of those that I talked about as very long-term, could very well turn into a very interesting stock. So this morning, these two candles were not here. We were here. And I said, I believe that we should be getting a strong move in LinkedIn, and we would like to buy it. It was trading at, it closed at 256, was trading just at about 258. I said I'd like to get it about 257. Okay. Why? Two reasons. The 120-minute chart had this very positive cup formation. So in the portfolio we have for my subscribers, we are long, we are short, and because I was finding more longs recently, the bias, I didn't allow any of my emotional and negative bias on the market to filter in. I spoke about this channel, this pattern right here as being a potential breakout pattern, and I spoke about this is the same pattern but in miniature. And what is it? It is a channel. It is like the Chapman wave falling axe formation, except this one conforms to the standard channel that people look at. And what I love about this channel is that the longer it takes without breaking down to a significant low, in this case, what would the significant low be? It would be the 238 level that LinkedIn had a high of on the 5th of February, before I think it was earnings news or something. On the 6th, it breaks out and the low is 261. 261, let me type that in, round number 261. And what's happened is it came down very methodically, and I love that, just in a nice, beautiful channel. How do you know? I mean, how does the chart know that it's making a channel? It just worked beautifully. So I loved it. Well, we missed getting in. And now the risk reward is, it's a little tougher because it's already testing the upper level of this channel. And the same thing in the weekly. It looks to me like it's going to go to leg D, and that would be the objective, to go above 276.18. So that's another 13 points from here. So we missed it. But the analysis was there. Everything was there. And sometimes it just happens. Now, wait a minute. You've got a stock that's up 3.19. I don't think there was any news. I don't even think that. I don't think there were any. There was. I don't know if there was any news. I didn't see any news. I just love the chart. I didn't expect that it would break away like that. And we wanted to start a position. It wasn't a full position. It was just a position. And I've found over the years that sometimes when I want to start a position, that's when not to be fussy. That's when not to say it's trading at 252. I'd like to get it at 251.70. Well, I did that today. I should have said, buy it at the opening. You know why? Even though it gapped up, 3 points higher than I wanted it at 260.02. It was a starter position. It meant that I'm waiting for it to come back down to add to it. So here we are. It's up 8 points at 264. Missed it. Not a bad, not a very nice analysis. Lousy entry point. And that's the way it is. And sometimes you'll learn, and sometimes you learn, but you don't change. I'm trying my best. Old habits die hard, and probably should have had at least a little position there. So our LinkedIn to purchase a company. You know, this is something else that's happening lately. We'll talk about that. Basil Chapman, Tiger Technicians out. Be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. So I had a question from a subscriber about my 100. Actually, I always get this question about the 120-minute chart. The way I have the 120-minute chart, and believe me, if I was an engineer or maybe just a straight mathematician, I probably would never have discovered the Chapman wave because there are a number of idiosyncrasies. But there is a bar from 3:30 to 4 right there. From 3:30 to 4 o'clock, that is only a 30-minute bar. And the question, I discovered this years ago. I didn't even notice it because it was a gray bar and within everything, and I'm so busy looking at peaks and troughs that and then one day I said to myself, wait a minute. Oh, I think it was because a number of people had said to me, wait a minute, we're starting at a different time for our wave count. Does it work out? And then over the years, what I discovered was as I investigated more and more why I have a half-hour bar, and yet I still get really good. People have seen it over and over and over, 120-minute counts to a peak D. It means that it's almost unexplainable because you're using a completely different set of parameters. I don't know why it works out, but it does work out. And I thought I had spent some time, I can't remember when, trying to analyze it and checking with other platforms that had the starting point maybe not at 3:30 but at 4 o'clock, or concluded at 4 o'clock, but you've got a time that starts at 9:30 in the morning and goes to 4, because unless it's the E-minis or unless it's the futures, I only go from 9:30 in the morning to 4 o'clock with my charts. All of the rest is after hours. I never show that. I do always in the futures because it's very important for the futures. However, I don't know how to explain it. I've tried to explain it, and all I can say is I'm not sure why it works out, but it does work out. Look at this. I've got a perfect peak D here at 11:30 in the morning on the 24th. And all I can say is that when I've looked at other charts, what happens sometimes is they go to an E. They might go to an extra leg, or they will get their D in a different place. I don't know how to explain it. It is just one of those things that I've accepted, and I treat it as if that's the way it is. So I thought I'd explain it better than that. I don't. I thought about it, and I'll over the weekend I'll see if I can come up with some other answers, and try to, if I can find my notes, I'll try to go back and see what my thinking was a long time ago. But all I can say is I don't know. So I thought I'd be able to give you something a little deeper than that, but I don't know. But I've just done it, and I've done it in hundreds of thousands of charts. So that's all I can tell you. So let me go back to this now for a moment. What I want you to say is that as we, great answer, thank you, Gator in the Den. Yeah, that's the only answer I can give. I don't want to make up an answer. I can only say that I've compared it over and over and over with others, and we've all come to the conclusion, damn, how does it work? I don't know. Why does it work in the 120-minute chart? Look at this. Here it is. Here's the 2-minute chart. I was going to show it earlier. Look at the low bar in the E-mini right there at 9:46 in the morning at 2084.50, and it goes peak A, B, C, D, goes to an E. The MACD turns around, the stochastic is failing, and what does it do? It doesn't give you a sell signal, but until it broke out to a new recovery high, it went 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 2-minute bars, and then it broke. I don't know what to tell you. Okay, folks, that's it. Check out my opening call. Go to the front page of TFNN. You'll find it very interesting, I believe, and hopefully rewarding. And I will be back on Monday. Stay tuned for Nico and Paige.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.